Hello, Business 202. This Google Hangout demonstrates the use of Excel formulas and functions in the solution to exercise 2221. This exercise deals with the schedule of cash payments that a company is making for the first quarter of 2015. You have the Eastgate Therapy Inc. is planning for its cash payments, and it knows that its accrued expenses as of January 1, that would be its accounts payable balance as of December 31, 2014 from its balance sheet, is $15,000. And the budgeted expenses that it has for the next 3 months would be in the schedule that you see here. For January, the total of salaries, utilities, and other operating expenses total $91,600. So that is the amount that you see for the January budgeted expenses. For February, that similar total is $112,200. And for March, the total is $119,400 as the budgeted amount of expenses. Now, within these expenses would be some non-cash expenses, specifically depreciation of $3,000 and $500 a month of prepaid insurance. In other words, in 2014, the company had paid 500 times 3, $1,500 of insurance for the months of January, February, and March of 2015. So since they have already been paid, these expenses do not represent cash outflows in January, February, or March. Of the remaining expenses, that is the gross expenses less those that are non-cash expenses, 70% are paid in the month in which they are incurred, and the remaining, which would be 30%, are paid in the following month. And it does verify that the accrued expenses balance, that's the $15,000 that we mentioned up here, were expenses that were incurred in January. And let's just stipulate that the entire amount of that $15,000 would have been for expenses that must be settled in cash. And as the charge states, we were to prepare a schedule of cash payments for January, February, and March. Okay, well, the amount that they're going to pay in January would be the balance in the unpaid expenses from December, or the balance at January 1, and that would be $15,000. So let's just enter in cell I-24, $15,000. Now, for the payment of the prior month's expenses, these would be the cash amount of expense exclusive of non-cash depreciation and non-cash prepaid expense. So we would want to make a formula that would take the total expenses for January. Remember, we are in February and looking back to the previous month's expenses. So that would be the amount in January less the sum of depreciation and prepaid insurance, which would be the non-cash expenses. So referring to I-19 less the sum of I-20 and I-21, which would be the non-cash expenses, would be the cash expenses that the month of January would have incurred. Pushing enter gives you the solution. Now, the exercise states that 70% are paid in the month in which they are incurred, so 70% of these expenses have already been paid, and 30% would be paid in the following month. So the percent to pay would be 30%. Formula that we would want to enter here would be the total cash expenses for January times the percent that would be paid, 30%, in February. Push enter to see the result. And there you have it. And finally, for March, March's payment would be 30% of February's non-cash expense. So let's create a new formula, push equal sign, push to the February total expenses, and then deduct the sum of the non-cash expenses, depreciation, and prepaid insurance. Push enter, and you have the total non-cash expenses for February of $108,700, and the appropriate percent that will be paid in March would be 30%. So calculating the March's payment would be the total expenses incurred in February times the percent of those February expenses that would be paid in March. That's 30%. Push enter, and you have the expenses, $32,610 from February that would be paid in March. Now, we're almost done, but not quite. We have to account for the current month's expense. That is, each of these months would have non-cash expenses that 70% of which would be paid in the month incurred. So let's just calculate those items. For the month of January, it would be very similar to what we have done up here. We would take the total January expenses less those expenses that would not entail the use of cash. That would be the sum of depreciation and insurance. See the result, and you can see it's the same amount that we had in the first schedule. The difference is, though, the percent that the company will pay is 70%. So the amount of January cash expenses that would be paid in the month of January would be the $88,100 of non-cash expenses times 70%, or $61,710. The amount paid in February would be the total of February's expenses less the sum of those expenses that would be non-cash, depreciation and insurance. $108,700, and 70% of those expenses would be paid in the month incurred, February. Pushing the equal sign, total non-cash expenses times the portion that represents a current month payment, 70%, would give $76,090 as the amount paid in February. And finally, for March, we would take the total expenses in March less the sum of the non-cash expenses in March, depreciation and prepaid insurance of $3,500, to arrive at $115,900. 70% would be paid in the month of March, and so let's just prepare that formula, taking the non-cash expenses for March times the percent to pay in March, 70%, to arrive at $81,130. At this point, what we want to do is to add all the cash payments that we have calculated, which is just the sum of the payment of the prior month's expenses paid this month and the payment of this month's expenses, the 70% that would be paid in the current month. So let's just prepare a sum function and add this entire column. And note, just for simplicity, I've highlighted all of the values that would be in that particular column. Close the parentheses and push enter, and you have the total payments for cash in January of $76,670. Now, here's a shortcut. Since this is a repetitive type of operation, I can copy one formula to wherever I want to use that same formula. So let's copy the formula that is in cell I-32 to the other 2 months of the schedule. So to effect the copy command, go to where you want to copy, push the right mouse button, click copy, move the cursor to where you want to paste to, right click, and then paste. And to do it again, let's just paste the value that would be for March, 113,740. So in sum, January's cash payments would be 76,670. February's cash payments would be 102,250. And third, March's cash payments would be 113,740. That's it. Give this a shot and upload it to your student folder on G Drive. Thank you.